Hey guys, welcome back. You're still tuned into Trading Hour on CNBC TV18. And as promised, let's talk about the commodity space now. Manisha joins us, and today she's going to recap all that went down in 2022 across commodities. Manisha.
Pavitra, thank you so much for that. I'll start with the energy space, where we are looking at Russia reiterating that they're going to cut production by 5 to 7% in the first quarter of 2023. And that is the reason we are still trading above $80 a barrel. This year has seen a high of 139 and 132 for both the varieties respectively. From those kind of highs, we're down by nearly 38 to 45%, but still positive in the year. So 5 to 11% of gains being put there. The gas prices were quite divergent. US was up because of the higher exports from US that we saw, but the European gas prices saw some profit taking after European Union put out a number saying that 83% of capacity is still filled with natural gas, and that led to some declines there. This is what the energy products have been doing. Gasoline, heating oil, plus quite strongly there. Coal clearly has been an outperformer in the energy sector with 138% of gains. Underinvestment and strong demand for fossils as the electricity prices were on the higher side clearly has led to that being a gainer. And the markets do believe that the first half of 2023 as well could be quite strong for coal going forward there. Moving on, that's of course the energy sector, but take a look at the precious metal prices. And while gold prices have been flat to slightly negative in the dollar terms, in the Indian rupees we have seen, pardon me, 12% of gains coming in for this year. Good performance continuing in case of silver, 3% up in the international markets, 15% up in the Indian markets. But the outperformance clearly comes in from platinum after declining nearly 23% in the previous year. 5% up in 2022 is how we are trading. Take a look at the industrial metals then, and we've seen copper and aluminum prices hit all-time highs in this year. So from those kind of highs, we're down between 35 to 45%. If for the year, down 15 to 16% for both of these commodities. The declines have just about continued, even more in case of tin, where we saw higher supplies but weaker demand, and that continued to weigh down to the markets. And zinc is down 15%, even as you are looking at all-time low inventories on Shanghai and LME. The reason being that the demand is weak, clearly playing on the prices there. Take a look at the nickel prices then, and that clearly was a headline this year. We saw $100,000 per ton of all-time highs here. The prices were then corrected to $48,000, and we're looking at 45% of gains in this year until now in case of nickel. The ferrous metals like steel and iron ore are closing the year in negative, anywhere between 15 to 6% on the weaker side. Last year, cobalt was up by 80%. This year has gone in for some profit taking. The metal of the year clearly is lithium, 109% of gains into this one, as strong demand from battery and renewables clearly keeps that market metal in focus.
All right. Thanks a lot, Manisha, for that, giving us a quick rewind on how the year shaped up for the commodity space. For the market itself, as of now, it's picking up some more pace. So the Nifty is at the highest point of trade, up almost 150 points. And the Bank Nifty is charging ahead, 450 points higher now. Let's slip into a quick break. When we come back, Gaurav Ratnapaki of Sher Khan will be with us.